Yeah, if you've been watching the global economy lately, it's definitely not smooth sailing, is it?
No, not at all. It feels more like, trying to navigate a storm with a wonky compass. Signals are all over the place.
Exactly. Volatile markets, these dramatic court rulings popping up,
Hmm.
earnings reports swinging from, amazing demand to bankruptcy fears. It's all happening so fast here in late May 2025.
It really is. The ground feels like it's constantly shifting, making it pretty tricky for anyone trying to get a handle on things.
And that's really why we're here. For this deep dive, we've pulled together quite a range of sources. We've got news reports covering everything from, say, Asia-Pacific markets to specific company earnings, then Costco, Dell, Gap.
Right. And then there's analysis of U.S. trade policy, those surprising court decisions you mentioned, insights into AI, which is just booming, and the rivalries there.
Plus discussions on ESG investing rules, even some news from that unique company town down in Texas. And, of course, comments scattered throughout from government officials and economists trying to make sense of it.
So what we want to do here really is guide you through this whole stack of information. We'll pull out the key insights, flag the surprising bits, and hopefully help you understand what's driving things and, why it actually matters to you.
Think of it as your shortcut through the chaos.
Exactly. A way to get informed quickly.
Okay, so let's dive in. Let's unpack this late May economic picture. And maybe the best place to start is with that big development from the courts. Kind of unexpected.
Yeah, definitely. What's really fascinating is how the U.S. Court of International Trade just, well, slammed the brakes on a big chunk of the administration's tariff strategy. That was Wednesday, May 28th.
They ruled that President Trump had, overstepped his authority using a specific law.
That's right, the International Emergency Economic Powers Act, or IEPA. Usually that's for, national security emergencies.
And the court said you can't use it for these broad tariffs.
Pretty much. They found it didn't grant the president such unbounded authority, was the phrase they used, not for these kinds of sweeping tariffs.
And this wasn't just a minor thing, right? This was a significant block.
Oh, yeah. A nationwide permanent block on many of those retaliatory tariffs from early April, the whole Liberation Day plan stuff. And crucially, it also barred any future modifications under that specific law.
Wow. And they gave the White House a deadline.
Just 10 days to comply. Pretty tight.
Okay. So how did the Trump administration take that?
Swiftly and strongly. They filed a notice of appeal almost immediately and asked the trade court to pause enforcement while the appeal happens.
And the rhetoric, I imagine that was intense.
Extremely. The White House press secretary really lashed out at the judges, called for the Supreme Court to step in, accused the judges of, quote, brazenly abusing their judicial power, threatening to undermine U.S. credibility, even judicial tyranny.
Strong words.
Very strong. And others in the administration, advisors, they echoed that, calling the court globalist, pro-importer, biased. It really shows you how high the stakes are perceived internally.
And the legal fight kept moving fast, didn't it?
Yeah.
By Thursday afternoon?
Right. Sources were saying an appeals court had actually reinstated the levies, so basically pausing the trade court's block for now while the appeal goes forward.
And there was even talk the administration might go straight to the Supreme Court, as soon as Friday.
Yeah, possibly asking them to pause the original trade court ruling. It's just this rapid-fire legal back and forth.
It really highlights that tension, between the different branches of government over trade power.
Exactly. But interestingly, even with this ruling and the appeal, a lot of experts don't think the White House is totally boxed in on tariffs.
The workarounds. You mean other legal tools they could potentially use?
Precisely. Analysts, including folks at Goldman Sachs, point to other parts of trade law. Things like Sections 122 or 301 of the 74 Act, dealing with unfair trade practices.
Or Section 338 of the 1930 Act.
Right, related to import investigations. These might still allow for unilateral import taxes, just, under a different legal justification.
Which leads some advisors, like Peter Navarro, to say nothing has really changed here.
Yeah, basically saying they expect to find a workaround. And Kevin Hassett, the White House Economic Council director, sounded confident the ruling would be overturned. He even mentioned having 3 trade deals ready for the president.
Okay, so this whole legal and political drama over trade, obviously hitting the markets.
It definitely rippled through. Asia-Pacific markets were mixed or lower earlier in the week, finished lower Friday. Investors just trying to assess the whole global trade picture and reacting to these court moves.
And U.S. stock futures dipped Thursday night, too, waiting for more news, just adding to that uncertainty.
Yeah, but what's kind of wild is despite all this noise and the trade worries, the major U.S. indexes were actually on track for a really strong May.
Right. S&P up like 6%, NASDAQ over 10%, Dow up 4% for the month. Pretty solid gains.
But then you look at investor sentiment surveys, and it's a different story underneath. That AAII survey, pessimism jumped back up.
Bearish sentiment hit what, almost 42%?
41.9%, well above the historical average. It's been like that for 26 of the last 28 weeks. Bullishness is definitely fading.
And the reason people are worried about
Tariffs, the economy, and inflation. Almost two-thirds, 64%, pointed to that combo as the biggest factor influencing their outlook.
We also saw the dollar tick up a bit after the ruling. Maybe some safe haven buying.
Could be. The euro didn't move much, though.
Okay, so the big picture on trade is, well, messy. Courts, administration, markets all reacting. But let's get down to the ground level. How is this actually hitting specific companies? This is where it gets really interesting, seeing how different businesses are handling it. Retail seems like a good place to start.
Yeah, and the key thing here is it's not hitting everyone the same way. It really depends on their supply chain, their business model, even decisions they made years ago.
Take At Home Group, the home decor guys. Reports say they're prepping for Chapter 11.
That's the word. And the source explicitly mentioned their money troubles are being compounded by U.S. tariffs. They've apparently been trying hard to find new suppliers outside China because of it.
Yeah, they don't have much cash left. Only about $17 million available.
Yeah, $17.3 million under their facility, and their bond value has dropped quite a bit, so clearly signs of distress there.
Okay, now contrast that with Gap. They painted a pretty bleak picture if these tariffs stick.
They really did. Said new tariffs could cost them maybe $100 to $150 million, even if they try to mitigate, or potentially $250 to $300 million if they can't. That's a huge hit.
No wonder the stock tanked after hours, like over 15%, even though they actually beat Q1 earnings. That tariff warning and flat Q2 sales forecast really spooked investors.
And they are trying to mitigate, right, moving sourcing out of China.
Yeah, aiming for less than 3% from China by year end, down from under 10%. Diversifying, buying more U.S. cotton.
The CEO said they don't expect meaningful price hikes for us right now, but admitted tariffs are, quote, throwing a wrench into their turnaround.
Especially with Vietnam potentially facing big reciprocal tariffs. That's a major source for them.
Exactly. A potential 46% tariff there adds another layer of headache. And, Gap's not alone in warning about prices. We heard similar things from Best Buy, ELF Beauty, Walmart. It suggests this is a broader retail issue, not just Gap specific.
Okay, but then you have Costco. Totally different story almost. They might actually benefit from all this volatility.
It's possible. The thinking is their competitive prices and bulk discounts could become even more attractive if other prices start rising due to tariffs, might drive membership renewals.
And their numbers look good. Q3 beat estimates.
Yeah, solid beat on EPS, $4.28 versus $4.24, and revenue, $63.21 versus $63.19 est. Sales up 8%, comps up 8%, e-commerce up nearly 16%. Pretty strong.
And their strategy involves things like rushing shipments, rerouting.
Right. Rushing goods before tariffs hit, moving them away from high-tariff countries, sourcing more private label stuff locally. They're making choices, too, like absorbing costs on staples like pineapples and bananas.
So maybe passing costs on for discretionary stuff like flowers.
Exactly. Based on whether it's a staple or not, China's about 8% of their U.S. sales, so managing that exposure is definitely part of their playbook.
It's just such a clear example of how different companies, different models, face totally different outcomes from the same policy.
Absolutely. And we saw ripples in other sectors, too. Synopsys, the chip design software company, they did something pretty dramatic.
Pulled their financial guidance less than a day after issuing it.
Yeah. They blamed uncertainty from new export restrictions to China from the Trump administration. Shows how fast policy, especially around tech exports, can force a major rethink.
And what about cars? Jeep unveiled that new Cherokee, the hybrid one. They need a turnaround, right? Sales have been sliding for years.
6 straight years of U.S. sales declines, yeah. Down 10% in Q1 this year alone. Affordability's been a real issue.
And the interesting thing with this new model is where it's being built.
Expected to be Mexico. And apparently that decision was made before the 2016 election and the current 25% auto tariffs.
So unlike the old one built in Illinois, this new Cherokee could face import taxes coming into the U.S.
Potentially, yes. Adds another hurdle to their turnaround plans.
Okay, so tariffs and trade are huge, obviously impacting companies differently. But there's a lot more shaping the economy right now. Let's broaden out a bit.
Definitely need to. You can't just look at tariffs in isolation. On inflation, for instance, all eyes are on that U.S. PCE data coming Friday.
That's the Fed's preferred measure. What's the expectation?
Pretty minimal rise expected for April itself, maybe just 0.1% month over month after basically zero in March. But year over year, still likely above the Fed's 2% target.
Around 2.2% for headline, maybe 2.6% for core PCE.
That's the forecast. And you always have to watch for potential upward revisions to past data, too.
Meanwhile, across the Pacific, Tokyo's inflation actually ticked up.
Yeah, core inflation hit 3.6% in May. That's the highest since early 2023. Partly base effects comparing to last year, but the Bank of Japan is watching that very closely.
And other regional data. Japan's job market still tight.
It's like it. Jobless rate steady at 2.5% in April, lots of openings per seeker. But South Korea saw factory output and retail sales both dip in April. So kind of a mixed bag regionally. Okay, shifting gears to, well, probably the hottest sector right now, tech and AI. Dell had some really telling news.
Right, their Q1 revenue beat estimates, though EPS missed slightly.
Yeah.
But the real headline was their forecast, wasn't it?
Oh, yeah. They massively raised their Q2 forecast adjusted EPS target of $2.25, revenue between $28.5 and $29.5 billion, and bumped up their full-year earnings forecast, too.
And the reason.
Unprecedented demand for AI systems, straight up.
And that just really highlights, how crucial they are as an NVIDIA vendor.
Yeah.
The demand for those AI chips is just flowing through.
Absolutely. Dell mentioned having a, get this, $14.4 billion backlog of confirmed AI orders,
Yeah.
and $12.1 billion of that came in just in Q1. It's staggering. The scale of investment is huge.
And speaking of NVIDIA, they're partnering with Dell on that new AI supercomputer,
Yeah.
Doudna.
That's right. For the Department of Energy at Berkeley Lab. Expected to be way more powerful, like 10 times the scientific output, 3 to 5 times overall performance, but on only slightly more power than the current system.
I saw quotes calling AI the Manhattan Project of our time.
And Doudna a time machine for science. It just underscores the hype and perceived potential there.
This AI focus also connects to Elon Musk, right? He left that government efficiency role, DOGE.
Yeah, apparently his time limit as a special government employee was up. Analysts were suggesting this means he'll be, quote, laser-focused on Tesla now, especially AI and autonomy.
Which lines up with shareholders reportedly wanting him to spend more time at Tesla anyway.
Seems like it. And the Musk story this week also had that layer of reported rivalry with Sam Altman at OpenAI.
Over that big AI deal in the Middle East, the Stargate project.
Sources suggested Musk tried to derail it, or at least influence it, after his startup XAI wasn't included. Allegedly argued Trump wouldn't approve it.
And that delayed the announcement, even though the White House confirmed a US-UAE AI partnership.
That's what was reported. It just adds this whole layer of, personal competition and maneuvering onto these massive global AI infrastructure plays.
And sticking with Musk for a second, but on a totally different scale, that Starbase news out of Texas, the SpaceX town.
Right. Residents got a notice warning they might lose the right to keep using their property the way they are now under a new proposed zoning map, a new mixed-use district.
Even though it's supposedly based on existing uses? Sounds confusing.
A bit.
Wow.
There's a public hearing planned. Seems like the town, which is basically run by SpaceX, is trying to get more control over building, launches, road closures, beach closures, significant power grab for a company town, essentially.
Okay, pivoting again, let's talk about ESG investing. That debate is still going strong.
Yeah, conservative economists, specifically from the American Institute for Economic Research, are pushing the Trump administration's DOGE to scrap a Biden-era Labor Department rule.
The one from January 2023, what's their argument?
They argue it lets pension managers prioritize environmental, social, governance factors, ESG, over just maximizing financial returns for shareholders. They see it as politicizing investments.
And they prefer the Trump-era rule, which required proof ESG did just as well or better financially.
Or that beneficiaries explicitly wanted it, yes. It's that ongoing tension over the role of non-financial factors in investment decisions.
Got it. And then there's crypto. Always something happening there.
Yeah.
SEC dropping the Binance suit.
Yeah, reportedly dropping it after that big settlement. But what's also interesting is Binance apparently taking a $2 billion investment from an Emirati fund.
In that new stablecoin launched by the Trump family's team, USD1.
That's the connection being reported. It follows that earlier SEC guidance that seemed to carve out meme coins like the Trump token, saying they weren't securities. And sources point to the Trump family's ties to these ventures, like holding a large chunk of the Trump supply.
So you got finance, politics, crypto, all kind of intertwined there.
Very much so.
Okay, one last area to touch on. How is all this uncertainty, the trade stuff, policy shifts, impacting something like business travel?
Well, there was a report from the Global Business Travel Association, GBTA, showing a really sharp drop in optimism.
How sharp?
Global business travel optimism fell from 67% last November down to just 31% in April. That's a huge drop in just a few months.
Wow. And what the reason? Companies changing policies?
Yeah, changing policies for travel to and from the U.S. Some are even moving events elsewhere. They're citing tariffs, border policies. Definitely cost 54% mentioned cost concerns, and visa issues, 46% mentioned those.
So this could actually benefit other regions if travel gets diverted from the U.S.
That's the idea, yeah. Other places could be winners, and there's that slightly counterintuitive thought, too.
The trade wars might initially increase some travel.
Paradoxically, yes, as companies rush around looking for new suppliers or markets outside the tariff zones, but the report suggests that longer-term, elevated tariffs will definitely hurt U.S. business travel overall.
Bringing this all together, we also heard from the Reagan Institute CEO, kind of framing the stakes.
Right, warning about the importance of U.S. economic strength in this environment, linking President Trump's focus on growth and strength to Reagan's peace through strength and economic miracle ideas.
The argument being that economic strength is fundamental for diplomacy, defense, everything.
That's the perspective. That it's not just about dollars and cents, but about overall national power and influence.
So yeah, while tariffs are maybe grabbing the headlines, the picture these sources paint is way more complex, all these interconnected pieces. Policy, tech, global markets.
Absolutely. And hopefully this deep dive has helped sort through some of that complexity and the sheer speed of change we're seeing right now.
So what does this all mean for you, listening in?
Well, given everything we've just unpacked, these court battles over trade shaping global flows, how companies are reacting so differently, some facing bankruptcy, others adapting, maybe even thriving.
Plus the relentless pace of AI, the shifts in regulation around ESG and crypto, even local stuff like that star-based zoning. Here's a thought to chew on.
What are the really significant long-term implications here for how businesses operate globally, for how economic power might shift between nations?
And maybe fundamentally, how is this tension, the push and pull between national policies like tariffs or export controls, and the undeniable reality of global interconnectedness, how is that actually going to play out in the months and years ahead?
That tension really does feel like the thread running through almost everything we talked about today. Definitely something we'll need to keep watching.